I read the job report today, so you guys don't have to. All right. So as we know, the stock market went down based off of the jobs reports that we got today. And here are all the in-depth details that you need to know. Most notably, what everyone is focusing on is that the jobless rate rose to 4.6% from a 4.4% back in September. This is the highest unemployment rate since September of 2021, which is something, again, we were talking about a month ago. Now, employers did add 64,000 jobs in November, partly erasing a big decline that we saw in October. However, the federal government has lost 168,000 jobs over the last 2 months. Now, what this does is it reinforces the interest rate cut we saw last week. There were a lot of federal layoffs, as we all know. Among all these job losses, manufacturing shed 5,000 jobs in November, which is an absolutely astonishing rate. And it goes further to show exactly what's going on between all the trade wars that are happening. The point of all those trade wars is to bring back manufacturing within the United States. However, there's 5,000 jobs lost. Now, this contradiction, what it typically does is it creates a lot of economic worry. And this report is a bit complicated, again, because of the 43-day government shutdown. It is a little bit of a mixed report. It includes the November job report, belatedly includes the October job report. And again, we've seen so many delays in these job reports that with this involved, there's just a lot of economic uncertainty going into 2026, which is why you're seeing a lot of investors now pulling their money. And there's a lot more talks about recessions coming up. Now, that is the meat of the report. Please trade and invest wisely based off of that. 2026 is going to be seen as a very, very determinant year of either it's going to be a recession or we're going to be economically fine and find a way through it. And I know there's been a lot of news reports. There was interest rates. Now there's this news. Understand it, digest it, and trade accordingly. For now, peace.